What's up, gang? This is Mike over at FOUS4Trading.com. Today I want to have a discussion going over how to short a former runner. What the beauty about day trading is that there could be a stock that moves 4, 5, 6, 7 times a year, and you can know how to trade that stock based on its previous price action. Some of you may say, well, how do you do that? The example I want to use today is TEUM. On any given day, guys, there's going to be a small cap stock that makes major moves, whether it's to the upside or downside. And in the future, if you're going to trade that small cap stock again, you want to use historically major resistance levels that were created by the former runner to begin with. So TEUM was a stock that was trading at 50 cents back in July and ripped as high as $1.77. So we established major resistance on the stock right here. So the first couple of steps that you want to do is, number one, refer to previous historical price action. How is this thing traded? You have major spikes to the upside, followed by major spikes to the downside as well. Step two is basically to establish major resistance levels. So 176 being one. We'll say that about 155 is another major one, given that the 200-day moving average is right here on the daily. And what else you want to do is, the third step is to gauge volume levels previously in order to gauge what type of volume you're going to need to see today in order to break out of those previous resistance zones. So on any stock, guys, if you're going to have a stock that's going to break out of previous resistance levels, it's very simple. You're going to need more volume than you had before. TEUM, when it had this major 300% rip, traded about 17.8 million shares. So if we're going to get anywhere near 170, 175, we're going to need to see that type of volume. Right out of the get-go today, we did not get that. So that's number one. Number two, you want to see where the stock could peak out. So obviously 155, 176, and now before that, if I had to take a horizontal line and bring it down, I'm going to say 137, which was basically the high created back in July. So these are your resistance levels. Going into today, I was discussing on FOUS TV, I was looking for a short if we got near 150. For me, that was more of my comfort range. This thing was up only 30%. I usually like to short stocks that are up 50 to 100%. So immediately this thing spiked up right out of the open and picture perfectly peaked out at 137, which was basically the resistance created back here in July. Because we did not get enough volume relative to the breakouts that we saw back in July, you could almost have a pretty good educational guess that this was not going to continue to the upside. So once we peaked out pretty quickly at exactly 137, you can see that this stock had a major, what we call an FU breakdown, which is a failed breakout, and basically a collapse really back to 1. This ended up bottoming out right at about 105, where it's sitting now. So this is a pretty good example to show you guys that almost all the time, and I say almost because there are outliers, almost all the time, former runners will never break their previous resistance levels. The only way that they can is if they exemplify more volume than they did on the previous attempt to break out. And TEUM is a pretty good example of this. Again, another way to gauge a former runner: establish your resistance levels, establish historical price action, and more importantly, establish volume relative to previous breakouts. So I hope everybody learns a little bit. Check us out at FOUS4Trading.com.